The basics of infinite banking. Hi, I'm Sunny Mitra, founder of Bright Horizon Wealth. We teach entrepreneurs and go-getters like you how to own their financial future with the concept of infinite banking. So make sure you subscribe to our YouTube channel and hit the notification bell so that you can be notified every Sunday and Thursday. We come out with brand new videos. Stay tuned to the end of the video to get a valuable tool today that will increase your savings easily and effortlessly. So today's topic is the basics of infinite banking. The secret of infinite banking can be summed up in two simple words: recapture and reinvest. Even though the process of infinite banking is pretty simple, but sometimes people tend to overcomplicate it. When we say infinite banking, all it implies is take your savings out from the bank and move it into a whole life policy. Now you might ask why. Before answering that, let me ask you a question. How much interest is your bank CD paying you? 1% or maybe, if you are lucky, 2%? If you look at infinite banking, it is basically a whole life insurance policy, and this special kind of whole life policy pays a guaranteed 4% compounded APR. I'll repeat, it's a guaranteed 4% compounded rate of interest. As you all know, when we say APR, that means annual percentage rate that an institution pays in the form of interest. By the way, there are only two places where you can earn compounded interest: either a bank CD or a whole life policy. But wait, there is more to it than just making more interest. If you choose the right kind of whole life policy, then you also have a chance to get a dividend check at the end of each year on the top of that 4% interest. But it all depends which company you choose. There is another advantage for the cash that grows within the policy. It grows at a tax-free rate. And not only it grows on a tax-free basis, but also you can take distributions from this account on a tax-free basis. You can take a loan out of it tax-free without disturbing the principal. So in other words, put your savings into your whole life policy, and remember, your goal should be to get in as much money as you possibly can. Let it earn on a tax-free basis. Utilize the money tax-free in the form of a loan whenever you need it. And the best part of it is, from day one, you will have the access to 60% to 90% of this money. Let me tell you a real life story. A couple that I know had a debt totaling to $120,000. They had all kinds of debt: credit card debt, mortgage payments, personal debt, you name it. When they heard about the infinite banking concept, they immediately put $10,000 into a whole life insurance policy as their annual premium, and then they turned around the same month, withdrew $6,000 from their account and paid off one of their credit card that had the highest interest rate of 29%. And over the course of the next 2 years, they pulled their debt down from $120,000 to $80,000. You might ask me, but Sunny, my existing life insurance policy does not allow me to do that right away. There I had to wait a long time to have access to the money. Why? Here is the reason. These whole life policies are designed as a cash value policy in mind, whereas a traditional whole life insurance is going to take about 3 to 4 years for you to start creating some cash value that you can actually use. Are you with me so far? Now that you have taken out your savings and moved it into a whole life policy, which is making a guaranteed 4% compounded interest, this is the vehicle that you use. Now in the next part, we're going to talk about the process. But before that, let me ask you a question. How do you use the banking system in your life? You might say, I save money there and also borrow money from them and paying them back principal and interest. And you are right. You must have thought from time to time that banks are profiting tremendously off of your needs. And you are right there too. So, how about reversing the process? Instead of borrowing money from a bank, what if you start borrowing against your own whole life insurance policy and fund your lifestyle, like whether it's buying a car, home, or as small as funding a mini vacation? Now think for a moment. If I told you that an average American pays to the tune of in between $280,000 to $450,000 just in interest alone to their creditors in their lifetime, will you believe me? If not, just Google it. And that is exactly what the infinite banking process dictates you to do. Stop paying those interest to the bank. So now I think you have a rough idea of what infinite banking is. In its simplest form, instead of getting a CD from the bank, you buy a whole life insurance policy and deposit your money there using it as your own family bank. And by doing so, instead of giving all that interest to the creditors, whether it's credit card, auto, home, or student loan, you take out a loan from your own policy and pay it back to yourself with principal and interest both, just like you'd pay it back to the bank. This thing alone over the years will make a big difference, and that is the whole premise of the infinite banking concept, or IBC for short. There are three legs to the stool of financial freedom: savings, investment, and insurance. The rule of savings says pay yourself first. The rule of investment says pay yourself interest. And the rule of insurance says never lose money. And you can find them all inside a whole life policy. So my question is, how do you get started with it, especially if you do not have some funds available? Follow the fundamental rule. Remember, the rule of saving says pay yourself first. So this is the tip for the day. Read this book, The Richest Man in Babylon by George Clason. It will provide you a new compass for your financial journey. So that's about it for today. Now I have a question for you. What is the one thing you got from this video today? Please let us know in the comment section. It will help us improve our message. Thank you for watching our video today. If you want to learn more about it, check out our free on-demand masterclass, which explains in a more in-depth setting. Please give us a like, subscribe, and share it with your family. Check out our next video named The Difference Among Whole Life, Term Life, and Universal Life. It's a very important tutorial. Those of you who are interested in working with us in creating a policy for your specific situation, make sure you use the link below to apply to become our clients. And don't forget to own your financial future, or someone else will.